Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about Alphabet stock, ticker symbol GOOGL. This is Class A shares, which has voting rights. Currently priced at $2,667. Past year up 28.96%. Past 5 years up 209.86%. So you can see in most recent years, it's a very high growth stock, very high capital appreciation. And it didn't really dip much with all the recent volatility, which is great to see that it retained a lot of value. This makes up 3.31% portfolio for Class A shares. I also have Class C shares, but I'll share that later. Market value of $10,669, or up 159% on this position. Take a look at the market cap, $1.77 trillion, P ratio of 23.76, and no dividend yield, which means they're reinvesting all profits back into growth. In terms of analyst ratings, 94% of them, of the 50 analysts, give it a buy rating, so it's great to see that positive sentiment. Class C shares, which I mentioned, does not have voting rights. This one makes up 2.48% of portfolio, or $8,052, or $8,000.52, up 167% on this position. So overall, I'm at about, I think, $19,000 in market value, or about 5% of my portfolio. Very high growth stock. I've been holding this for a while and still believe in the long-term outlook. Taking a look at the actual earnings report, you can see the CFO of Alphabet and Google said that their fourth quarter revenues of $75 billion, up 32% year over year. Great to see that tremendous double-digit growth. Reflected broad-based strength in advertiser spend and strong consumer online activity, as well as substantial ongoing revenue growing from Google Cloud. So great to see a lot of increased spend on the online ad space, which is their primary revenue driver, as well as more people become, as more things become digitized and move online. Google also benefits from that. And the CEO, Sundar Pichai, he said that the deepest investments in AI technologies continue to drive the growth of the business. So very positive overall. And scrolling down a bit, taking a look at the revenues. Quarter end, December 31st, you can see up 32% year over year. Operating margin up 29% year over year. And net income also increased. In terms of year end, December 31, so overall the entire year, up 41% year over year. Very big growth year over year. Operating margin up 31% year over year. Net income $76 billion. So wow, it's very impressive to see that kind of growth. Even at this size, Alphabet continues to grow. Take a look at the breakdown of their number of the revenue breakdown. So you can see Google search and other, $43 billion. YouTube ads also increased year over year. Let's see, pretty much all across the board, their Google search, YouTube ads, and online ads across the board increased year over year. Now, in terms of the revenue for the traffic acquisition costs, you can see also increased. Number of employees increased significantly from 135,000 to 156,000. So great to see that kind of growth. So as they continue to grow their company, they grow their headcount as well as their revenue. Taking a look at some of the other businesses like Google Cloud. So you can see Google Services increased slightly. Google Cloud, they didn't lose as much compared to last year, even though it's a loss. Other bets increase in terms of the loss. Corporate costs, that one also increased. And they're also doing a stock split, 20-for-1 stock split. So for every share you hold, you receive 20 share. So think of it as a pizza or pie. When you cut up a slice, you get a slice of that. It doesn't really change the value overall of the company. It's more cosmetic change, considering that you can buy fractional shares these days. So yeah, you might see a slight increase in stock price just because some people might jump in, but overall, I think it's great to see the stock split, and long term, it doesn't really make a difference. Taking a look at the key stats of the company. Taking a look at this, you can see P ratio of 23, which is very low. For PE of 22, that's great to see that. PEG ratio, so this is relative to growth, 0.91. So it's always good to see this below 1, which means they're undervalued. So undervalued relative to the growth. So I think it's a very solid valuation. You can see 52-week change up 32%. Scrolling down a bit, looking at dividend yield, they don't pay out any dividend. Now, take a look at the profit margin. You can see 29.51%, operating margin trailing 12 months, 30%. So it's great to see that profitability. Management effectiveness, return on assets, almost 15%, return on equity trailing 12 months, 32%. Taking a look at the income statements, revenue of $257 billion. Quarterly revenue growth year over year up 32%. Gross profit of $146 billion. EBITDA $91 billion, which is earnings before interest, tax, depreciation, and amortization. Net income of $76 billion. Quarterly earnings growth 35%. Let's see, taking a look at the balance sheet, $139 billion. So great to see that kind of cash on hand, considering that if there's any risk or downsides, they can cover their liabilities. Debt of $28 billion, so great to see that kind of debt to equity. So every dollar debt they have, or every $11. Let me see, debt to equity. Yeah, so every dollar equity they have $11 in debt, but they have a very strong balance sheet overall. So overall, I think Google, or parent company Google, is a very high growth stock, as you can see in the past 5-year trend. Very solid balance sheet, and even though they don't pay a dividend yield, but their capital appreciation is very strong. And you can see their double-digit growth year over year across the revenue and net income. So very impressive company overall. And I do have some shares of Google and plan to continue holding long term. And that's all for this video. What are your thoughts on Alphabet's parent company at Google? Make sure you like this video, give it a thumbs up, and comment down below. And remember to use my referral links below, and both of us get $20 for using personal capital and a free stock for using Robinhood. See you in the next video.